What if I told you that Jeff Bezos' net worth isn't actually the result of some genius investment strategy or insider trading? It's something much simpler, and honestly, it's something most people actively do the opposite of. Today, we're breaking down 5 habits that made Bezos essentially untouchable in the business world, and more importantly, how you can use these same habits to build real wealth in 2026. Let's start with the uncomfortable truth. Bezos is worth over $200 billion right now, and not because he's the smartest person alive. He's rich because he's lived by a completely different set of rules than the average person. And worse, most of us have been taught the exact opposite habits our entire lives. By the time you finish this video, you're going to understand why traditional personal finance advice keeps most people poor, and what actually works. Let's dive in. The first shocking habit that made Bezos untouchable is something I call obsessing over unit economics instead of revenue. Here's what most entrepreneurs get wrong. They chase top-line revenue numbers like it's the only metric that matters. Bezos did the opposite from day one at Amazon. He cared obsessively about how much profit was made on every single transaction, every product, every delivery, the math per unit. When Amazon was growing, Wall Street kept pressuring Bezos to be profitable immediately. He famously ignored them. Instead, he asked a different question. What's the unit economics of this business, and how can I scale it without destroying the math? This is critical. A business doing $10 million in revenue but losing money on every unit is a disaster hiding behind a big number. A business doing $1 million in revenue with strong unit economics is a goldmine. Let me give you a concrete example. When Bezos expanded Amazon Prime in 2024 and 2025, he didn't just add members for vanity metrics, he analyzed the lifetime value of a Prime member versus the cost to acquire and service them. That's unit economics thinking. He knew that if the math worked per customer, he could scale infinitely without going broke. Here's how this applies to you right now in 2026. If you're building a side hustle, starting a business, or even investing, you need to think like Bezos. Don't obsess over how much money is flowing in. Ask, what's my profit per transaction? What's my return per dollar invested? If you're investing in the stock market, this is why index funds and ETFs consistently beat individual stock pickers. The unit economics of diversified, low-cost investing work mathematically. The S&P 500 is up 1.3% this month alone, but that's irrelevant if you don't understand the compounding math happening in the background. The second habit that made Bezos untouchable is radical reinvestment. Most people, when they start making money, want to cash out. They want the lifestyle upgrade, the house, the car, the validation that they've made it. Bezos did the opposite. He took Amazon's profits and reinvested them back into the business obsessively for decades. Even when Amazon was profitable, he kept reinvesting instead of paying dividends to shareholders. This is so counterintuitive that it actually drove traditional Wall Street investors crazy. They wanted dividends. They wanted proof that Amazon could make money. Bezos wanted to build an empire. He reinvested into faster delivery, better warehouses, technology infrastructure, and later cloud computing through AWS. That reinvestment didn't just make Amazon bigger, it made it more defensible and more profitable long-term. The magic here is compound growth through reinvestment. Einstein supposedly called it the eighth wonder of the world, and he was right. When you reinvest your gains instead of extracting them, you're not just growing your wealth, you're accelerating your growth rate. $100 reinvested grows faster than $100 withdrawn. Now, how does this work for regular people in 2026? If you're building wealth, the most powerful move is to reinvest your gains. If you get a bonus, don't spend it. Invest it. If your side hustle makes $5,000, don't buy a new phone. Reinvest that money into the business or into dividend-paying stocks through platforms like Fidelity or Vanguard. If you're trading crypto or stocks, set a rule that profits get reinvested, not withdrawn. The longer you let your money compound, the less effort you actually have to put in over time. The third habit is one I call thinking in decades, not quarters. This is where Bezos completely separated himself from normal business thinking. Wall Street operates in quarterly earnings cycles. Investors want profits now. The financial media screams about daily market movements. Bezos ignored all of it. He built Amazon with a 30-year horizon. When Amazon Web Services was in early development, it was a money-losing operation for years. Competitors laughed at him. But Bezos knew something they didn't. Cloud computing would eventually become essential infrastructure, and the unit economics would eventually be dominant. He was right. AWS now generates more profit than the entire retail division and is the backbone of Amazon's empire. This long-term thinking also gave Bezos permission to make stupid, short-term decisions that made sense long-term. He offered free shipping when competitors charged. He built warehouses before he needed them. He reinvested profits instead of returning them to shareholders. All of this looked bad in quarterly reports, but brilliant over a decade. Here's the practical application for you in 2026. The market is choppy right now. The Nasdaq is down 2.3% this month because of semiconductor sell-offs and concerns about tech earnings. The Dow is up 1.7%. Bitcoin is down 2.1%. Gold is down 6.1%. If you're checking these numbers daily and panicking, you're thinking like a quarter-focused investor. Bezos would ignore this noise entirely. Instead, commit to a multi-year or multi-decade wealth-building plan. If you're investing in index funds, bonds, real estate, or building a business, decide on your strategy and check it quarterly or annually, not daily. The S&P 500 will have months where it's down. That's normal. The question isn't, should I panic? The question is, does my long-term strategy still make sense? If it does, ignore the noise and keep executing. The fourth habit that made Bezos untouchable is building leverage through systems and delegation. Most people try to build wealth through effort, working harder, longer hours, side hustles that never scale. Bezos built leverage. He created systems and hired people to multiply his impact. From the beginning, Bezos was obsessed with hiring brilliant people and giving them autonomy. He created the famous two-pizza team rule. Any team should be small enough to feed with 2 pizzas. This forced clarity about what each unit should accomplish. He then empowered those teams to move fast without him. This created leverage. Bezos' time wasn't the constraint anymore. Systems and people were. This is why Amazon could eventually operate at a scale that would be impossible if Bezos personally had to approve every decision. The leverage came from building processes and hiring the right people to execute them. By 2026, Amazon operates in dozens of countries, with hundreds of thousands of employees, and Bezos isn't involved in daily operations anymore because the systems work without him. For you in 2026, leverage works the same way. If you're building wealth through a salary alone, you're trading time for money. If you're building a business or side hustle and you're doing all the work yourself, you're capped by your own hours. Real leverage comes from systems. Automate what you can. Hire or delegate what you can't. Use technology, tools like Zapier, HubSpot, or accounting software like QuickBooks Online to systematize your financial life and business operations. If you're investing, leverage comes through mechanisms like real estate financing or dividend reinvestment. A real estate investor with 3 properties financed at 5% interest is building more wealth than a person with 1 fully paid property because the leverage is working for them. If you're starting a business, the leverage comes from building products or services that can scale beyond your personal effort. The fifth and final habit is separating core assets from distractions. This is where Bezos' discipline really shows. By 2024 and 2025, Bezos was worth over $200 billion. He could have invested in anything: sports teams, technology startups, political campaigns. And yes, he made some diversifying moves with Blue Origin and other investments. But he stayed disciplined about what his core wealth driver was: Amazon stock. Bezos understood something crucial. His net worth was almost entirely dependent on Amazon's success. Instead of panic diversifying or chasing shiny objects, he doubled down on what actually created his wealth. He held Amazon stock through ups and downs. He didn't need to be a skilled investor in other domains because he was already a billionaire from one company. Now, this doesn't mean you should put all your eggs in one basket. That's actually dangerous advice for most people. What it means is, identify your core wealth driver and protect it fiercely. For most people, that's their career and income-earning ability. For entrepreneurs, that's their business. For investors, that's their investment portfolio. The trap most people fall into is getting distracted. You read about crypto and suddenly you're day trading Bitcoin. You hear about a hot real estate opportunity and you're over leveraging. You see a friend's side hustle and you abandon your own plan. Bezos didn't do this. He stayed disciplined. He built one thing, made it dominant, and then selectively diversified from a position of strength. In 2026, this is more relevant than ever because of the information overload. Every day there's a new investment opportunity, a new side hustle trend, a new way to make money. Bitcoin is down 2.1% this month, so people are panicking or frantically buying the dip. Tech stocks are down because of semiconductor concerns, so people are rotating into different sectors. Gold is down 6.1%, which contradicts the narrative that gold is safe inflation protection. The noise is deafening. Your job is to cut through it. Identify your core wealth-building strategy, whether that's your career, a business, index fund investing, real estate, or some combination, and protect it from distraction. Revisit it annually, but execute consistently monthly or quarterly. This single habit of staying disciplined while others chase shiny objects is worth millions over a lifetime. Now, let me tie this together and show you how to actually apply this in 2026. The economic landscape right now is interesting. The Fed has been managing inflation carefully, and there's speculation about interest rate direction. Dallas Fed President Logan called for modestly higher rates recently, which could affect everything from mortgage rates to business borrowing costs. The job market is still strong, which means income earning ability is still viable. Stock valuations are mixed. The S&P 500 is holding up better than the Nasdaq right now. Here's what this means for you. The best time to think like Bezos is when you have income stability. Use your job or business income to fund your reinvestment strategy. Pick a primary wealth driver. Maybe it's your business. Maybe it's a diversified index fund portfolio through Vanguard or Fidelity. Maybe it's real estate. Commit to it for the next 3 to 5 years minimum. Second, systematize your finances so that money moves automatically toward your core strategy without requiring willpower. Set up automatic transfers to investment accounts. Automate your bill payments. Use apps like YNAB or Monarch Money to track unit economics in your personal finances. This way, you're building leverage through systems even as an individual. Third, resist the distraction. Yes, there are opportunities everywhere. But Bezos' wealth came from relentless focus, not from being the smartest investor in the room. Most people get rich by doing one thing really well for a long time, not by constantly switching strategies. Here's the bottom line. Jeff Bezos didn't become untouchable because he was smarter than everyone else, or because he found some secret investment hack. He became untouchable because he lived by 5 habits that almost everyone else does the opposite of. He obsessed over unit economics instead of vanity metrics. He reinvested instead of extracting. He thought in decades instead of quarters. He built leverage through systems instead of trying to do everything himself. And he stayed disciplined about his core wealth driver, instead of getting distracted. If you implement even one of these habits seriously, you're going to see results. If you implement all 5, you're going to build generational wealth. It's not fast. It's not sexy. But it works, and it's working right now in 2026. If this resonated with you, I want you to do 2 things. First, subscribe to Money Mindset TV because we release strategies like this every week. Second, comment below which of these 5 habits you're going to focus on first. Are you going to obsess over your unit economics? Are you going to commit to reinvesting your gains? Are you going to extend your time horizon? Are you going to build systems? Or are you going to protect your core wealth driver from distraction? Tell me in the comments, and let's build wealth together.